Well, what a busy week. We've had the Trump speech, we've had the jobs report, we've had everything moving all over the place. Let's take a look at the charts and see if we can make sense of everything that's been going on. Stay tuned for it all. Welcome back to Strategic Markets for the end of week wrap up. And yes, it was a short introduction, but we're going to be going into quite a lot of stuff this particular week. So let's get right into it. You can take a look here at this particular chart here for Brent crude oil. Now you can see two charts, one on the left-hand side for the Ichimoku curve and one on the right-hand side in relation to all the moving averages. It may look a little bit confusing at first, but as we go through things, it'll come very, very clear in the grand scheme of things. Firstly, what happened? Okay, well, now this is where things got really, really interesting. Firstly, let's take a look at what has actually happened throughout this week. The biggest news of all really was the Trump speech that actually occurred midweek. As soon as that actually happened, we had this huge spike. Okay, really, really happened basically on Thursday here in Australia. Essentially, what basically happened was as soon as that really did occur, the huge spike that really occurred from basically down here to around about 102 Brent crude all the way up, literally in around about 20 minutes whilst Trump was speaking. And it was quite incredible to watch. What was of most interest, though, was essentially the change in USO. USO overall, in terms of the overnight market, was increasing and increasing and increasing and increasing so much that it was literally all of this gap was basically filling in whilst he was speaking all the way through. And it was just an absolutely insane move that was actually occurring before your very eyes. Now, this wasn't actually occurring overall on the markets directly because USO was actually closed at the time. But when it actually opened up the next morning, it opened much, much higher. It was trading around about 125, 130, so forth, whilst he was actually speaking. And then opened at 130, what was it, 139 in New York trading at 8:30 in the morning the following day. Then went violently all the way through the day, went as low as $131.89 in that particular day after it opened, and then basically ended up going to around about 137. So quite a lot of movement going on throughout the day, but as you can see, it actually went up 11%, $13 in the one day. But one thing I'm really, really fascinated about by this is how much USO has actually jumped in one day compared to the move that Brent crude actually made. Even though it went up 8.5%, it didn't jump far as much in terms of actually going, say, like beyond the 4-hour support and resistance lines that we've been talking about for quite some time here on this channel. And that is really the biggest thing. The mere fact on a relative basis, compared to where Brent crude has been on a relative basis, the USO jump in terms of the relative aspect there and how far away it is away from these moving averages tends to suggest that there may actually be a potential reversion to the mean that may actually occur in order to normalize itself as well at some particular stage around the corner. So keep an eye out for that as well there too. In terms of the news, I'm sure Yash will bring a lot more news back when he's back here from his holiday on Wednesday. But it's going to be very, very intriguing to see what actually happens, say, for the rest of this weekend, and also what happens beginning of the week as we end up coming back from the long weekend as well. So we've had the long weekend over in the United States. We don't have as long weekend over in the United States compared to, say, down here in Australia. We actually have Monday off as well here in Australia. So there's going to be quite a long extension of time away from the markets here in Australia compared to over in the US. They will get back into trading again very, very soon. I'm currently recording this on Saturday afternoon here in Australia. So there could be a lot of things actually happening over the next few days. So it'll be very, very fascinating to see what happens. But on top of that as well, take a look at this big red candle that we see on USO. The red candle itself, even though we've got a tail, is very, very fascinating. This could indicate that we may be seeing a bit of a topping out and that potential reversion back as well. So really keep an eye on this space. Unless we see a major breakout on volume, there could be that pullback overall. Another thing I want to really drag everyone's attention to as well, that I've been referring to as well, just referring across to my broker here as well too, are the open interests. Now, if we take a look, say, at April, you can have a look here. This is the kind of thing that I've been referring to for quite some time. This column here is the open interest area. And here are the volumes that were traded on Thursday, because Friday was public holiday over in the United States. Now, overall, here being the 120 strike is the highest open interest at this point in time for the April contracts that are going on. So overall, you've got probably around about 20,000 contracts open or so forth, unless these have been closed out overall. That's the amount traded on that particular day. As you go upwards, you can see that there's a few more strikes, a few more options being traded there at 125 and a few more at the 135. So you can see between 120 and 135, a lot of activity going on there. A bit here at 140 as well and 150. They're your biggest nodes overall. But as we keep on scrolling up, you'll also see 200 is coming in play in the very near future in terms of the 14 days of the April contracts. Quite intriguing overall there. You could be looking at, say, 15,000 plus or minus 2,500. So there could be, if we looked at this on Tuesday, those 2,500, if they were purchased, might increase that open interest up to 18,000. Or if they were closed out, it could be reduced down to about 13,000. So keep an eye on these figures that are going on there as well. That's the April contract. In terms of the May contract, now 12,500 there at 120 strike. With 130 strike, looking at about 5,000. The 140 strike, 6,000 plus or minus 2,000 contracts. And then you've got a bit there at the 150 strike as well. Not really much more than that, or as you're scrolling through up there. Some of the 245 strike, about 5,000. But, you want to be looking for the highest open interest overall. And then if we look at the June contracts, not many in the low areas overall, but not really too many in the high areas, 150 being your highest strike. So it looks as though things are seeming as though they might be looking as though perhaps around about 150 in the long term in terms of whereabouts we're looking at in June. That's where everyone's potentially thinking that USO might be going towards. So we are still having a lot of people in terms of the option market makers thinking that this is a prolonged kind of war. They're not feeling as though it's really out of the woods overall. And that tends to align with what the international media has been thinking about the Trump speech as well. And that was summarised quite well in terms of this particular article at thedawn.com, where there seems to be a lot of murkiness about what everyone's really thinking. No end date for the Iran war itself. A lot of key questions unanswered. But I think the really, really interesting ones that were actually spoken about were two of these particular headlines overall. No end date for the Iran war itself and few details on the strategy ahead. That was the Associated Press. And on top of that as well, the New York Times basically saying a few key takeaways overall, but he estimated would end in about 3 weeks. So there's conflicting reports amongst the media overall as well. So it's a lot of moving parts and everything's still in flux overall, as you can see. But USO is definitely showing a lot more strength. You can see higher highs and higher lows and lagging indicator there as well. Brent Crude hasn't really broken out on the lagging indicator overall, so we're really stuck range bound in relation to that. But the most interesting thing I really want to bring across to everyone's attention is the volatility. Now, if we were really seeing a lot of major problems going on in relation to this war, you'd be expecting the volatility to be shooting up and going absolutely crazy. We are not seeing that happen at this point in time. In fact, if anything, we're actually seeing lower highs and lower lows actually forming in relation to the lagging indicator in particular, and we're actually seeing everything starting to actually fall beneath all in terms of all of the unit prices itself, falling beneath all of these lines in terms of the Tenkan-sen and the baseline. And also, when we take a look at the moving averages, the unit price has fallen beneath the short-term moving averages as well. So overall, volatility seems to be being sucked out of the market as well too. everything seems to be calming down. There doesn't seem to be a mass amount of fear going on in this market. This tends to suggest that overall, in relation to equities, things could actually be on the improve. Overall, not a bad thing. However, there was an interesting thing that most people may not be aware of in terms of the investing community overall. Whilst everyone's getting ready for the Easter Bunny and everything like that over the coming weekend, getting all the Easter eggs out. I apologise if you don't actually celebrate Easter, but that's a lot of things that some people do actually do. But in relation to all of those kind of things there, or at least just going away for the long weekend and just having some time with the family and just relaxing a little bit, this is something that actually occurred this morning. The markets might be closed, but the unemployment rate was actually still released and bonds were actually still being traded this morning in terms of Friday. Now, in relation to that, this is very, very interesting because the unemployment rate itself actually came in better than expected. What did this do to the overall market? Well, the market was closed overall. However, the dollar itself was actually improving. May not look so much on the chart itself. Intraday, though, the market actually did improve quite well for the dollar itself, and you would expect this normally in terms of improved employment circumstances. What did that also do for the bonds themselves, though? Well, firstly, let's take a look at the situation for the bonds before the unemployment rate was released. Overall, it seemed like it was actually starting to improve a little during the week. You may remember from last week, they were actually testing the September lows. They could have even been potentially testing towards July lows of last year, had they broken the September lows of this during this week's trade. However, it didn't occur. They actually bounced off those lows and actually started testing a prior support. Looked as though things were actually going pretty well. It was testing that support level there. Everything looked like it was going okay. So we're thinking, all right, well, the bonds might actually be starting to improve and start going okay. After this unemployment rate was actually released on Friday morning, Good Friday, markets closed, the bonds were still trading. And you can see from the final print there in terms of the Friday, you can look down below, the Friday date down there. This was a negative day for the bonds in terms of Good Friday. They've fallen 0.3%. Now you might be saying, Steve, that's not very much at all. However, that erased the entire day of trading the previous day. That could be enough to basically push the TLT back below that support level, to put it back into range-bound territory. Now you might be thinking, okay, well, that's not too much overall there. We're still in range-bound, we're still looking pretty good, but that could be enough to get it down below those short-term moving averages come Monday, I suppose, over in the United States, when the markets open up again. Enough to weaken the bond market enough, and you have to remember the bond market is larger than the stock market, that could be enough to basically get things on a downward trajectory again. What is the bonds inverse of? The bonds are inverse of interest rates. That could be enough to get the interest rates back above the short-term moving averages again. And then everyone might be thinking, oh no, this could be along the lines of preventing further interest rate cuts. More along those lines of those kind of thoughts there. That could then eventually feed through in terms of pressure on the overall markets as well, which were just attempting to stabilize themselves in relation to these kind of aspects here. Most importantly, like we've been discussing in previous videos as well, in relation to things like the Russell, which are interest rate prone. 2,000 small cap stocks in particular, which rely quite a lot in relation to borrowing, and that would be very, very dependent on interest rates. So overall, that's just stabilized itself above short-term moving short-term moving averages and the 150-day moving average here. So we could be potentially testing that area there and maybe coming down there as well too. So definitely keep an eye on the Russell. Obviously as well, definitely keep an eye on how this responds to the 200-day moving average again in terms of the Dow Jones, because that was actually struggling to get back above that and struggling to keep above the short-term moving averages. So it's just testing that again. And you can see it's just making higher highs there on the Ichimoku and just trying to get itself up above the 10th and the cent again there over on that side there. Well, it hasn't actually got above the 200-day moving average on that side. I'm glad I'm putting these charts on the side again for you now too. Makes a bit of a difference. When we take a look at the SPY, what's the situation there? Very similar to the Dow. Okay, so struggling to get back above the 200-day moving average. And this one actually hasn't made a higher high in relation to the Ichimoku. So there's a bit of relative weakness here with the SPY compared to the Dow Jones. If we take a look at the Qs, being the tech heavy, there's even more relative weakness there compared to the Dow Jones. And really struggling to maintain itself above there. So if we have a down day in relation to things on Monday, even though it was actually fairly decent on the last couple of days, and it was a pretty good bounce off a gap down, when we take a look at how things were on Thursday, we were expecting everything to go, oh, absolutely awful on Thursday, gap down, but very nice day in terms of recovery on Thursday. Will there be enough in terms of a follow through to keep it all going? That will be the big question. Okay, so that covers the major indices. That covers Brent crude, USO, and also volatility and the dollar. Where do we go next from here? Well, we can always look at gold. Now, gold was very, very interesting because that actually fell towards the end of the week, but didn't fall exceptionally badly, I suppose, because it didn't actually fall beneath the 100-day moving average. A lot of media hype was coming out and saying, oh, gold is absolutely going crazy and going downwards in terms of going down 3%. But didn't fall too dramatically in relation to the 100-day moving average, as you can see here on the white line. Didn't fall beneath that. And on top of that as well, we haven't actually created any, say, lower highs and lower lows in relation to the Ichimoku lagging indicator there either. But it hasn't maintained itself above the baseline. So there's a little bit of caution there towards the end of the week. But there was actually a good test of that baseline, as you can see, being that red area there. So overall, gold has actually got a reasonable amount of strength on it, especially when we compare it to silver, because silver has not actually tested that baseline at all to the upside. And on top of that as well, you can actually see on here as well with silver, it has not actually stayed above the 100-day moving average at all. So gold, definitely much, much more relative strength compared to silver at this point in time. And I suspect as well, if you compared gold to a lot of the other precious metals as well, so like palladium, platinum, and all of the rest, you'll most likely see a very similar situation, especially when we take a look at the situation where a lot of these will be trading well below that VWAP, being that green line on top of it. Okay, Bitcoin. How's the circumstance going there? Well, okay, we really have not changed much since Wednesday at this stage here. We are really still struggling beneath all of these lines, and it is not looking very nice at all for this. It would need to really get above this prior support resistance line here from May 2024. That line there is 69,289. It's currently trading well below that at 66,917, as you can see. And it's just not looking like a pretty picture at all. Yeah, I don't think there's really much more to say than that. On top of that as well, Ethereum overall is well below that 2101 level that we've been always continually talking about, and that's that prior support resistance line from April 2023. On top of that as well, you can also see they're well below those short-term moving averages as well for both of them. I'll flip back to Bitcoin so you can see that. The yellow and the cyan line turning downwards as well, and also on the same thing with Ethereum there too. So they aren't looking strong overall. There doesn't seem to be anything turning them around. You'd really want to see anything apart from lower highs and lower lows on those as well. And that pretty much covers everything for the week. So that's really, really fascinating. I will leave you with one other chart though, which I thought was extremely interesting, and that is the XLU. Now, the reason why I've picked this one out of them all in terms of all the sectors is because this is really showing some very, very interesting strength that's forming in this. you can see from this one on the right hand side, we had this big bounce off this 4-hour support and resistance line back on the 7th of November. Bounced off here, and ever since then it bounced back through the VWAP, came right up through there, came back and tested that VWAP, and then bounced all the way through all of these lines. The 50-day moving average, as well as the short-term moving averages here as well, bouncing off them each time and going up through them. It's now coming up to test a 4-hour support and resistance line up here from the 16th of October. Should it break through this and be able to actually successfully come through this and perhaps even test and bounce off that, this is actually going to be showing enormous strength. Why is this a problem for the market overall? Utilities are a defensive stock, and if a lot of people are actually piling into utilities, they may be seeing that there's an issue with the market overall and they need to have some form of a defensive mechanism behind them. Something to consider and something to really keep in mind. Now, one thing to also keep in mind as well is utilities now also composes a lot of the nuclear stocks. So really keep that in mind as well whilst you're actually taking a look at all of these factors as well about where you might be wanting to put some certain aspects of your cash into places as well too. Obviously not financial advice, but definitely something to keep an eye on in relation to where flow is going in relation to everything. On top of that as well, you can see the lagging indicator is really starting to improve with higher highs and higher lows forming there with that lagging indicator. You can just see the green line just there. So it's starting to form in that way, even though the Tenkan-sen being that green line has still fallen beneath that. Keep an eye on that line in particular to turn upwards and potentially cross over that baseline. But the fact that the unit price has actually crossed over the red baseline is interesting. So that's the interesting chart of the day that I wanted to share with you there as well, which may give even more rise to people becoming more defensive, especially as we're getting more and more potential turmoil in relation to the bonds. I'll leave you with that as a thought. On top of that as well, I'll leave you also with the thought that if any of this information is becoming very, very useful for you in terms of your own trading strategy, leave us a comment down below. Let us know what is becoming very, very useful for you in particular, and we'll make sure we cover that in even more depth for you if that's of any use for you in particular. Drop us a like, drop us a comment, and even subscribe as well so you actually get the notifications as they arrive, because we're actually thinking of actually making a few more extra videos on top of that as well to provide extra coverage about certain aspects, particular analyses of certain indicators or certain lines on charts, like for instance the 4-hour support resistance lines, those kind of things there as well. So as soon as they drop, if you've got the notifications on, you've got the subscription going on as well, you'll know as soon as they drop. I'll leave it there for now. Enjoy the long weekend, have a well-earned break, have a well-earned rest. It might be a little bit of chop going on more than anything else as well in terms of the market's trying to figure out which way and which direction to go. Once it breaks out one way or the other, we'll then have a bit more clarity as to exactly where things are going from there. So get that rest going on, and then we'll be able to figure out exactly where the markets are heading. Until next time, which will be Wednesday, and Yash will be back with all the news as well then too. We'll see you then. Bye for now.